Hey guys, what's up? How's it going? Robin here. Welcome to today's video, and inside today's video we're going to be talking all about RioCan. So earlier last week I did a poll asking you guys if you guys would be interested in a RioCan based video, and I got 64 votes on the poll, so thank you guys very much for everybody who voted, and 80% of you guys voted yes to the RioCan video. So here we are today, and in today's video, like I said, we're going to talk about RioCan, we're talking about the dividend, and I'm going to talk about whether I think RioCan is a good stock to buy right now. So here's some quick basic information about RioCan Real Estate Investment Trust. So RioCan is the second largest real estate investment trust REIT in Canada and has an enterprise value of approximately $14 billion and owns 289 primary retail properties. All of RioCan's properties are located across Canada, and the current chief executive officer is Edward Sunshine. Hope I'm saying that name correctly. RioCan was founded in 1993, and it was one of the first real estate investment trusts in Canada. RioCan achieved significant growth in its early history with an annualized 16% return from its initial public offering to 2013. RioCan invests primarily in supermarket and junior department store anchored neighborhood convenience operated shopping centers. It owns both enclosed malls and power centers, and in a large range of sizes, RioCan tries to ensure that no one tenant makes up more than 10% of its rental revenue. As of 2017, its largest tenant is Loblaw, and this accounts for about 5% of their rental revenue. So RioCan is a pretty popular Canadian REIT stock right now because it's one of the biggest dividend yield based stocks, and it's also one of the biggest REITs in Canada. And REITs right now in Canada are doing a lot of cool different things. You know, some of them are down, some of them up, but RioCan is kind of like in a really unique spot here. So in today's video, we're going to focus on this, and we're going to talk a lot about RioCan. But before we get into RioCan, let's talk a little bit about REITs in general, and then we'll jump into the video further and talk more about RioCan and what I think about RioCan. And towards the end of the video, I'm going to show you guys if I'm actually going to be buying RioCan, and I'll share with you guys my thoughts on if I think RioCan is a good buy right now. So when it comes to REITs, REITs are always a good investment, and there's a lot of reasons why you might want to add REITs inside your portfolio. And when I first got started with REITs, the idea of owning real estate while not actually being a landlord and having to care for that real estate was a very attractive thing. So that's basically why I got started with REITs in the first place. Now, I myself do own quite a bit of REITs, and I did do a REIT investing case study, and I do have a REIT portfolio on this channel, and I do own a few shares of RioCan. In fact, I've been buying RioCan ever since the pandemic happened earlier this year, and as you guys can see here on this graph, RioCan was trading at about $25 Canadian, $26, even a high as $27, and dropped all the way down to $12 Canadian. And fast forward about 6 months later, and we are currently sitting at about $14 Canadian. So RioCan still has long ways to go. And the big question that everybody's asking right now is RioCan a good stock to buy? Now, one of the more popular characteristics of REITs are the fact that they have really high dividend yields, and in most cases they pay them on a monthly basis. RioCan, however, is currently taking this to a whole new level, currently sitting at a dividend yield of around 10%. That is pretty crazy. Now, if you're a beginner investor, and I thought this way in the past as well, a nice good yield like that might look really, really good, but the reality is when you see high yields like 10% and anything really in that high range, even for REITs, this can kind of raise some red flags, and you might want to ask some questions about why is the dividend yield so high? And the first thing you want to look at when it comes to this kind of stuff is the company's financials. You want to look at their debt, you want to look at their payout ratios, you want to look at they can actually sustain what the company is paying out versus what they are earning. So let's take a quick peek at RioCan. Let's see how their dividend payout ratios are, and let's see how the company is doing in terms of that. So the first thing we really want to pay attention to here is look at RioCan's payout ratio, and we can see that over the past 12 months, their payout ratio was sitting at 566%. So this is pretty high. This is very, very high, and this would really raise a red flag for me right off the hop. REITs normally do have high payout ratios, but anything over 100% would definitely be something to look forward into. Now, going towards the end of the year, we can see that RioCan is sort of starting to stabilize a little bit in terms of earnings, which is good to see, but still, as you guys can see, their payout ratios are still pretty high. So this is definitely something to consider, and the fact that they haven't cut their dividend yet this year might indicate that sometime in the future they may cut their dividend. This isn't for sure, but looking at some of this information can kind of make us think that maybe there's a possibility that this could happen over the next couple years. Now, like I mentioned earlier, RioCan is still paying about 0.12 cents per share right now, and their dividend yield has not been cut since the pandemic happened earlier this year. Now, this isn't all doom and gloom, because if you look at the actual price, the prices went down quite a bit, but the main reason why a lot of people think the price of RioCan is still super low right now is because of the uncertainty in the real estate in REIT-based market in Canada, specifically in retail. And this is probably one of the most attractive things about buying RioCan right now is the fact that the stock price has not recovered. So when recovery does happen, if you buy RioCan right now and it does recover to pre-pandemic levels, we could see some pretty big gains. And when it comes to this, I think this is one of the most attractive things about buying RioCan right now. And if the dividend yield does stay at 9 to 10%, you could also lock in a nice dividend yield. But I wouldn't be surprised if this does get cut in the future. But still, stock appreciation and stock growth into the future does look pretty attractive. So when it comes to facing adversity in recovering, RioCan is no stranger to this. And the nice thing about RioCan that shows that they know how to go through hard times is the fact that in 2008, when the financial crisis happened, you can see that RioCan took a big blow towards the middle to the end of 2008, but then in 2009 it recovered really nicely and kind of kept going strong. So this is some good things to look at. This shows that RioCan can recover in hard times. Now the pandemic is obviously bringing different struggles. It's a whole new different type of struggle, but you know, it does show that they have recovered in the past. So maybe this is good news that they'll be able to handle themselves going into the future. Now, one of the big reasons why RioCan is really struggling right now is because retail got hit the hardest during the pandemic. And as you guys can see on their website here, a lot of the tenants that RioCan has are, you know, different stores, different shops, different restaurants, things like that. You guys can see all these pretty common different businesses here. You can see Canadian banks. We have Canadian Tire. We have Shoppers, Drug Mart, you know, all these basic like food and restaurant and wholesale and retail based kind of companies. And, you know, a lot of these got hit pretty hard. A lot of them shut down. Not all of them, but, you know, as you guys can see, that's probably the biggest chunk of real estate that's got hit the hardest during the pandemic is definitely the retail based. Now here's some good news when it comes to RioCan. So for RioCan on a quarterly basis, the cool thing about them is that they recently released their quarter 3 earnings, and it looks as if RioCan's earnings and revenue are starting to stabilize to some degree. As you guys can see, 2020 has been a pretty rough year for them, with the first quarter doing not too bad, but then the second quarter doing absolutely horrible. But then the third quarter we're starting to stabilize a little bit, actually even get higher than the first quarter. So this is good signs, and obviously they have a long ways to go from here. But it does show that, you know, there is signs of recovery, and maybe this is a good thing for the stock going into the future. So with RioCan's good quarter 3 earnings going out, I think this really shows that RioCan is a safe stock. It's starting to stabilize a little bit, and I think if quarter 4 can go along the same lines of quarter 3, I think RioCan is going to be 100% safe to buy into, and we could see RioCan over time maybe sustain their dividend to a pretty good level and actually grow back to pre-pandemic levels. In total, RioCan has reported a total loss of $350 million, and most of that coming from fair value losses. And the reason why I think RioCan is going to probably come out on top after seeing quarter 3 earnings is because RioCan is one of the biggest REITs in Canada, like I mentioned earlier. With a total enterprise of $8.5 million and a total asset of $15 billion, I think RioCan is in a good position, and they actually have a very low debt ratio. So they have lots of assets, they have lots of enterprise value to kind of weather the storm. So if quarter 3 and quarter 4 can be really positive, I think going into 2021, RioCan's going to do really well. So the big thing I would like to see from RioCan, and one thing that's going to really help them out, is if the pandemic can kind of recover and we can avoid going into a second wave and a second lockdown, this is really going to benefit RioCan. And if RioCan can take what they've learned in quarter 2 where they hit those losses and maybe diversify and grow as a company, I think this is key. So if RioCan can do this, learn from their mistakes and grow into the future, I think they're going to do quite well. And of course, the big question that everybody's asking is, will RioCan do well? I think going into the long term, they're going to stabilize and sustain themselves. But in the short term, we could see some losses. We could see some dividends get cut. Nobody really knows what's going to happen. But I think long term, they're going to do well. And this is why I think RioCan is probably a good stock, at least to some degree, to add to your portfolio if you're a fan of Canadian real estate. Alright, so early in the video, I told you guys that I'd give you guys an update on how my shares of RioCan are doing. So here inside my Wealthsimple Trade account, I'm on the desktop view. We'll click on the RioCan Real Estate Investment Trust tab here, and we'll show you guys some information on how my shares of RioCan are doing. So I currently own about 42 shares, and I've been buying this since the start of the year when I started buying REITs. So I did start buying RioCan before the pandemic. But I kind of had a little bit, but I've kind of been trying to buy more since the pandemic happened. I have $623 total value of RioCan, and my overall performance is down about negative 2.95%, which is only $19. And the average price that I bought bought it at is about $15.29 Canadian, and as you guys can see today, it is up about 0.27%, and it's about 15% of my portfolio. So I do own quite a bit of shares of RioCan, and I also own RioCan in some ETFs as well. But I have been buying some individual shares, so maybe I own about 20% to 25% RioCan, I would say, overall inside this portfolio. And today, because I did this video and I do think RioCan is going to do well, I'm going to be buying some more shares. I will mention before, guys, like I don't think RioCan is something you want to go too crazy with, but I definitely think that if you're okay with putting a little bit of risk and you do like Canadian REITs, maybe buying a few shares of RioCan right now is a good idea. So I have $31 in my account, so I think I can buy 2 shares of RioCan here. So I'm going to buy about 2 shares here. And as you guys can see, that's going to be about $29 Canadian. So I think we can buy it. So let's click buy here, and we're going to place the order. And now we have 2 shares of RioCan. So there you go, guys. I hope you guys enjoyed that. And I do think RioCan overall is a pretty good REIT to buy. Alright guys, so if you guys want to follow alongside me as I grow my investment portfolio and as I do these videos, be sure to subscribe to the channel. If you guys enjoyed this video, please give it a big thumbs up. Thanks for watching, guys. Hope you guys have yourself a good day and take care, and I'll see you later.